The worst day since the pandemic and the best day since the pandemic. Let's talk about this wild roller coaster market on the Weekend Update. Okay, friends, let's talk about the market. Here's what you need to know. First up, here's the market, same way we've always been looking at it. Red is the S&P 500. Orange is its 50-day moving average, which I believe we are still in a testing period for. Purple is the 200-day moving average, which is our next level of support if we fail the 50-day test. There's been a lot of activity, a lot of action this week. The main message that I want to send to you is that our 50-day test is still alive. If you'll remember last week, one of the things that I talked about in the market is I said that 50-day tests and 200-day tests are very normal in uptrends. They happen all the time, and they don't necessarily signal the end of an uptrend, and that's why you don't want to trade too much around them. And I mentioned that when we come down to the 50-day, typically we see a whole bunch of chop. That's certainly what we saw this week during this testing period. It's what we saw during the testing period earlier in the year. It's what we saw in the testing period late last year. And one of the things, the barometers that I used to determine whether we've given up on the 50-day or not, I like a close 3% below the 50-day. That's what tells me that the 50-day is broken. If you look at where we are today right now, 533, we are not 3% below our 50-day of 543. So we're still alive. That's good. Now, astute watchers of the channel might say, well, wait a minute. What about Monday and Tuesday? The market was down 3%. Certainly we closed 3% below our 50-day at that point in time. Wasn't that a signal? Yes and no. Yes, it was a signal. Technically, we violated the rules. But no, it wasn't a signal because there was something exogenous happening to the market. There was something unusual happening there. Basically, the Japanese carry trade was unwinding. And what that did was that created all sorts of artificial selling pressure that sort of exacerbated the weakness in the market. And remember, why we're looking at the market in the first place is we're trying to look for the natural signals. Where would the market be naturally without any sort of, one-off shocks or anything like this coming into play? In fact, last week when we looked at the market, I said, hey, there's three things that are moving markets. One is economic weakness, two is going to be the Iranian response, and three was the Japanese unwind. Monday and Tuesday was all about the Japanese unwind. There was all sorts of forced selling pressure in the market, but that's not a good reason to sell. We've seen unwinds before. We will see unwinds again in the future. And basically what happens is someone just sort of like pukes up all of their holdings onto the market, and it causes, a pretty bad couple of days, but it's not a really good signal. All it tells you is someone is getting blown up. But that's not a really good reason to sell your stocks. That's not a really good reason for the market to go down. And so I don't think it's surprising that almost immediately after the Japanese unwind was taken care of, the market started to bounce back and we're alive again. This is one of the reasons why we don't use stop losses. This is one of the reasons why we don't hard code our rules in. We always allow a little bit of personal judgment. And in this case, our personal judgment has saved our position, so we're able to capture this bounce and prevented a whole bunch of tax consequences. So what's moving markets? It's still the same three things, although I'm striking out the Japanese unwind. I'm saying that one is probably done for now. So what do we have? We have economic weakness remaining, but we just got through earnings season and the weakness wasn't that bad, so I like our chances there. We've got Iranian response. So the market is still on pins and needles awaiting a response from Iran. And if you remember previously on the channel, we've talked about this, geopolitical events really don't move markets. And in fact, it's entirely possible that the Iranian response may be overhyped, at which point I think the market has some rocket fuel to go higher from here. So what does this all mean? We've kept our longs, we're still alive, things look good. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.